Google and Microsoft stocks. So these two stocks are consolidating within a longer term uptrend, and they are both outperforming the S&P 500. They also contribute to represent 10% of S&P's market cap. So yesterday, the 25th of October, both of them traded above average volume, above average volumes, 58 million for Google and 55 million for Microsoft. So we also saw that on Tuesday after the market closed, that's Tuesday the 24th, Google reported disappointing cloud services revenue, and all of that revived fears of an economic slowdown. So you can see it lost that almost 10%, 9.6%, whereas Microsoft gained 3.07%. So what's happening is that it's this cloud revenue disappointment. Google is exposed to a lot of startups, and these startups require they get their funds from instruments associated with Fed funds and treasuries, and very well that interest rates have all gone up. So all of these they've started to affect these startups. They are cutting back costs, and ultimately, if they are cutting back costs, cloud services, these services are infinitely expensive, up there with labor costs. Very, very expensive. For a lot of startups, it is probably sometimes up to 10 times more than their labor costs and all that stuff. So it is definitely has come to affect Google. So you can see what they're saying here, according to the folks at Morningstar. You can see, let's get it here, saying here that cloud revenue growth aligned with the expectations, but was slower than Microsoft Azure's 23% versus 29%, which pulled Alphabet shares down in after hours trading. But all in all, they still think things are still very much strong for Google. So the network effect for Google's core advertising business remains strong, and as they anticipated. Hesitancy among advertisers is lessening, demonstrated by accelerating revenue growth in both search and YouTube. Okay, so demand for artificial intelligence drove Microsoft's growth. Yes, you can see that. I don't know if I mentioned that. Yes, so of course, Microsoft is associated with ChatGPT, and they think demand among Google's larger clients was similar as well, but the firm is more exposed, as exactly as I was saying, with high growth and startup clients. Yeah, exactly. So they have been more aggressive, in cost. Exactly what I was saying. Actually. So, however, they also believe that reduced economic uncertainty combined with the necessity of artificial intelligence to operate more efficiently will bring in more cloud clients for Google and increase client usage, accelerating revenue growth in the fourth quarter and the next year. So they are not making significant changes to Alphabet's revenue estimates. They've increased their Google search and YouTube ad growth projections, but lower the expectations for Google's ad tech revenue. They have increased their capital expenditures forecast because of growing demand for artificial intelligence services. So yeah, that's in a nutshell, that's what they're saying about Google. Okay, so for wide-moat Microsoft, it's reported solid first quarter results, including meaningful upside on both top and the bottom lines. They see modest improvement in demand in the demand environment on the commercial side, with Azure strength, modest AI contributions, and easing of cloud optimization efforts by clients, and persistently solid execution. They also are encouraged by Microsoft's outlook, especially consistent Azure growth in excess of 25% throughout the year. Guidance includes Activision, which adds more than $6 billion in revenue to the estimates, but pressures margins in the near term. These factors drove them to raise their fair value estimate to $370 from $360, and they continue to see the shares as modestly undervalued, dancing between 3 and 4 stars. So yes, For Google, yes, it's not as fantastic relative to what Microsoft is doing in terms of artificial intelligence revenue and the take up of the artificial of Bard itself. So Microsoft is way ahead, and it's clearly showing. And indeed, the other one is the cloud services. High growth clients and a lot of startups. All of these companies that are definitely cutting costs. And it's definitely has affected Google. So but Microsoft has stolen the match with ChatGPT, and it's still on. Still, the interest in Microsoft is still very much strong. So this is the daily chart for Google. So it's expected that it's going to continue to show some weakness up till Wednesday, the 1st of November, and then maybe come Tuesday the 2nd, it might bounce from there to around that is for on its 1-day moving average to around $136.04. So there are a couple of projections that we have here. There's a downward projection of 123.47, and then just above where it is we have a 130.8, and then there's another one. There's 133.24, and there's also that also coincides with the projection of its 10-day moving average for Tuesday, the 31st of October. And then we have an upper projection of 135.16, and then we have 136.56. That's also where two 10-day projections are. That is the projection for Monday the 30th of October, and then Tuesday the 2nd of November. So there's we're seeing what looks like a cycle there. So one looks like a full cycle there. A bottom and then a peak. So but outside that, projections go all the way up to 149.65. So let's look at the weekly chart for Google and see what we have. Weekly chart is projecting weakness all the way down continuously, all the way down to the Monday the 4th of October. So obviously monthly chart is this is a weekly chart, so it prints every 5 trading sessions, and then but let's look at the monthly chart before we go to Microsoft's projections. But in the monthly chart, it's totally different. So it's projecting that all of these will go away and then by early January things might start to improve. We don't exactly know whether that will be the case, but it's projecting that it's going to even plunge all the way down to its 10-day moving average, 10-month moving average is going to plunge all the way down to 103.74. But for February, it's going to continue. It's going to be around where it is right now. By February, March, it's going to probably come back. But I think the projection is that things are not looking very good for Google at the moment. But let's look at Microsoft. Okay, Microsoft, this is the daily charts. It's the same as well. Even though it gained 10%, it's also projected that weakness is going to come in. I mean, this is apart from other things. Remember that these two stocks represent 10% of S&P 500. So there's been weakness there. Currently, let's see what's going on right now. We're live on as the S&P futures down at 4158.78. So weakness is projected on the two stocks, and then it bounce again to come Tuesday, Thursday, just pretty much like what we have on Google as well. Come Tuesday, the 2nd of November, is expected to bounce from this weakness. It's going to see up till Wednesday, the 1st of November. So let's look at the 1 week chart and see. On the 1 week chart, okay, unlike Microsoft, unlike Google, it's the 1 week chart is projecting strength up till Tuesday, up to Monday the 20th of November, and then weakness after that it's projected it's going to plunge all the way down to its 10-week moving average. It's going to plunge all the way down to 291.99 come Monday the 4th of December. So let's look at the monthly chart and quickly have a look at what's going on there. On the monthly chart, yes, very much unlike, this is where they differ, very much unlike Google's strength is projected all up till 1st of March. So maybe, but weakness is projected in the short term, but ultimately it's going to show strength, 319.37, but that's also lower than where it is currently trading, 319. So I think all in all, the weakness is projected on the two stocks, but more so on Google. So on the daily chart, Microsoft, I think, just has one upper projection of 357.06. Every other thing is a downward projection all the way down to 291.38, and then we have 309.77, we have 316.53. so see what you make of these two stocks, and I'll definitely continue to update you. Thank you very much for watching this video.